How's it going, everyone? As you guys know, I joined Bitcoin Magazine in the end of April. It's an exciting job to be at, but I want you guys to be at the Bitcoin conference. So make sure to get your tickets by going to b.tc/conference. That's b.tc/conference. Use the promo code YTMAG, as in YouTube Magazine, for 21% off. The best promo code in the business. Since I joined Bitcoin Magazine, I love working for a Bitcoin-only company. It's great to work with other like-minded Bitcoiners. Make sure that I can see you there with other great Bitcoiners such as Preston Pish, Stephen Livera, even President of El Salvador, Bukele, will be there for Bitcoin 2022. That is, go to b.tc/conference and use code YTMAG at checkout for 21% off your conference tickets. Hope to see you guys there. Have a good one. Hello, everyone, and welcome to the show. My name is Chris Alamo, and I am an amateur investor. This podcast is my open source journal of everything I learn about investing and wealth management. I'm here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path towards financial independence and financial literacy. My mission is to build us from amateurs to experts. All suggestions are my own, and I recommend that you should do your own research before taking any investment advice. See you in this week's episode. I hope you enjoy. All right. How's it going, everyone? This is episode 71 of the Amateur Investors. I have the pleasure of speaking with none other than Matt Odell. Matt Odell is a Bitcoin OG that's been in the space for a number of years and is prolific in his own right, finding his niche in the privacy space. Matt Odell runs his own podcast called Citadel Dispatch with a Bitcoin privacy focus, is a co-host of Tales of the Crypt with Marty Bent, having weekly episodes called Bitcoin Rabbit Hole Recaps. Venture partner in 1031, which invests in Bitcoin, leading Bitcoin native companies. Also founded OpenSats, a company which founds Bitcoin companies and backs Bitcoin open source development, building the future of infrastructure in the Bitcoin space. And most importantly, obviously, a coworker of mine at Bitcoin Magazine. How's it going, Matt? Thanks for coming on the show.
How's it going, Chris? I love the hat.
Thanks, man. I got it from you. I really appreciate it. It fits my head well. I think it's got that good OPSEC, so I'm not revealing that I'm a Bitcoiner, but if you know, you know. So that's why I love wearing it out. So I'll just get right into it. Matt, tell me a little bit about yourself. Like, where'd you grow up? Your family life and all that, and then we'll lead into Bitcoin eventually.
Well, I'm not going to give you too much of my early history, but I can give you some Bitcoin history.
For sure.
First of all, I mean, you called me a Bitcoin OG. I'm just a Bitcoiner. I'm just an amateur investor myself who stumbled into Bitcoin. I actually didn't think of it really as an investment at first. I like to dabble in sports betting. And I guess it's a little bit before your time, but there was a moment called Black Tuesday in America. And Black Tuesday was when all of these sports betting sites were forced. The MasterCard and Visa all pulled themselves as payment options. So you couldn't deposit and withdraw. So they weren't made necessarily illegal. And it's funny now because we have like the FanDuels and the DraftKings and the Yahoos and the ESPN. It's like everybody is doing sports gambling now, like all the Atlantic City casinos and shit. But at that time, there was a real push against online sports betting and just betting in general. And so I had, not that much money. I had, like $800 stuck on one of these sports websites, and I was a young kid. I was like, this is fucking ridiculous. Like, how is that a thing that I can't get my money on and off of a website? And all the options were ridiculous. It was, mailing checks and all this crazy stuff. And at the same time, the Snowden leaks happened. So this was like 2013. It was like late 2012, early 2013. The Snowden leaks happened. I saw we couldn't trust our tech companies. And I stumbled on Bitcoin. And I guess it was just, I had this happens a lot to people. They have, one person tells them about it. They write it off. A second person tells them about it. They write it off. And then it was my third touch point. And at that point, when the third touch point happened, Snowden had already happened and the sports betting had already happened. And I said to myself, there might be something here, even if it's just like online cash for US for Americans betting on sports. But I also was skeptical that it could work. So I literally just kept going down the rabbit hole. And I guess my dad really tuned into me this idea that you should understand what you're investing in and you should have a focus. So 2013 kind of went down the rabbit hole, started going down the rabbit hole, tried to see how it could break, how it couldn't work, like very skeptical. We had that run up to like 1200. And then we fell back down to 150. And I was down a bunch on paper, and my dad told me I was an idiot. And so that was like basically all the motivation I needed to try and understand it more. So I just spent people don't realize like that 2013 run up to the 2014 down. We didn't go past that all-time high until maybe early 2017, late 2016. So there was like 4 years there where we just all looked like idiots, especially if you just got in. So I basically spent the majority of my formative Bitcoin years trying to prove the haters wrong and convince myself that I wasn't a complete dumbass. And then when we got out the other side, I was obsessed, and I've just been obsessed ever since. And I kind of just, there seems like there's no greater mission that you can be a part of right now that's actionable, that actually can make real change. And I've just been really focused on education and focused on trying to make the space more robust. And really where I see a lot of the deficiencies in Bitcoin is not in the corporate side, but Bitcoin has become a corporate asset. You have all these, multi-billion-dollar companies that have sprouted out, regulated companies like Coinbase, the Binances of the world, the FTXs of the world. You have MicroStrategy, stacking onto their corporate balance sheet. But the real lack of attention seems to be in open source development, privacy, and education. So I've just been pretty much focused on that. And yeah, the rest is history. I just can't, I remember when we were kids, everyone said like, oh, you got to do something you love. There was like 6 years of my life where I just thought that was bullshit. 6 years of my grown life where I just thought that was bullshit. And I was very strongly of the belief that you just do what pays you the most, and you do what you love separately of that. And somehow I've found myself in this position where I actually get to do what I love. I get to focus on what I love, and I get to meet people that I have I get strong bonds with very quickly. Like like that's crazy to me. Like usually I feel like we should be just ultimately, if your listeners take away anything from this, just be grateful to be where we are, when we are, with who we are. It is absolutely astonishing. And I'm just grateful every day for it. Yeah, I can hear you. I apologize.
No worries. No, that was a good rant. I heard it all. So we're all good on my end, and I'll cut that. No, it's funny. I mean, a lot of people think like Bitcoin Magazine, that's who we work for, obviously, that there's a ton of us. But there's actually a very small niche. We are considered a small business, or at least that's what I would consider us.
Definitely run like one.
Yeah, definitely. And there's benefits and downsides to that. But I agree. I mean, like, I'm very fortunate and lucky to be, the producer of Bitcoin Magazine live stream and run the Twitch account and stuff. And I'm just grateful every day that, like, the job that I have, I don't know. I'm in this weird spot. Like, do I consider it the most important job in the world? Maybe not. Someone that's giving like life-saving surgery or something like that. Yeah. But I do consider what we do as a whole very important. I guess people's financial health and well-being and safety and security, I do. So I do really cherish my job and what we do for sure. And yeah, even to your point, I was an engineer by trade, chemical engineer. And then I ended up leaving the engineering field. One, because I was kind of seeing the rot of ultimately the fiat mindset in it. But two, just like I felt like I wanted to move on to something that I felt was more important than what I was doing. And full disclosure, I took a little bit of a pay cut to do so. But with that being said, we always do. And that's something that you mentioned. Speaking of something that you mentioned, I know in the Investors podcast with Preston Tish, that was episode BTC 44 last September, you were talking and you were saying you feel very fortunate that back in 2013, you kind of got burned immediately, which helped you build your conviction versus some people, like even if you look right before the COVID pandemic or even right in 2020, if you're buying then, I mean, you're still up probably 4X from what you were. If you're buying around 10K, 11K, 15K, I mean, you're still up an astronomical amount. Yeah, we ultimately went up to 68K and then came back down a decent amount. But overall, like if you bought anywhere 2 years prior or even like a year and a half prior, you're probably doing much better off. I guess talk about how that benefits, staying humble and stacking sats is kind of your meme, but if you want to expand on that.
Well, I mean, look, every good meme is based in truth, right? That's what makes memes powerful. And Stay Humble Stack Sats came from just years of being in Bitcoin and just distilling everything down, everything that I've been paying attention down to just a core little phrase, Stay Humble Stack Sats. It's really, that's what it comes down to. And so on Preston's pod, we were talking because it was the opposite for him. With Preston, he came in 2015. It was only up until the end of 2017 for him, where we went to like 20 and then went back down to 3,500. But the thing is like, look, the way I look at it is Bitcoin is an extremely volatile beast. We're going through its adoption phase, and as a result, during this adoption phase, short-term price movements, no one has any idea. We're just fucking gambling in that respect. If you look at it on a long-term horizon, my expectation has continued to be that as adoption increases, the price should rise because it's scarce. It's scarce. Not that many people use it. As more people use it and hold it and stack it, it should go up in value. It's a very simple thesis. But the thing is, humans are greedy, right? And that long-term thesis is not enough for most people. And what happens is people start to think they're geniuses, right? If you have 3 years of just fantastic gains, you're going to think you're an absolute genius. And then when that 85% correction happens, which always seems to happen, you're going to get absolutely crushed. If you have leverage, you're going to get crushed. And then it's not only on the actual trading side or whatever. 99% of people who trade are going to end up with less Bitcoin than if they just long-term stack. It's also just on the technical side and getting comfortable and like using the tools and learning how to hold your own keys and use your own node. Bear markets, you have no noise. Bear markets, it's only the true believers. You're trying to prove it to yourself that you're not an idiot. You're trying to improve your setup. You're trying to improve your understanding. And there's a humility that comes with it because you don't feel like you're the smartest person in the room, which undoubtedly happens when the price is running up. So it really does give you this nice little petri dish to experiment with things, get comfortable, rather than, seeing your stack go up 20x in 4 months, 8 months, and not knowing how to secure it, not knowing how to use it. And then all of a sudden those numbers are way bigger. So when you try and learn, it's just way more nerve wracking. There's definitely something to it. And I got crushed really quickly. I got crushed really early on. And I like, the way like I said, you either stay humble or Bitcoin humbles you. That's just how it is. I don't know what the issue is. I haven't it's a new setup with Zoom, but now I'm wired. So.
All right. Sounds good. You can hear me.
It won't happen again.
All right. Sounds good. No worries. I'm trying to think where I was going. So perfect example.
You either stay humble or get humbled.
Stay humble or get humbled. Yeah. So obviously, I've been buying on the way up and, watched it dip a little bit, but I was basically saying that my average cost basis is still kind of below what the price is right now. So overall, my thesis looks like I'm still in the green. Obviously I'm dollar cost averaging in at a higher amount, but, I guess it would have to go lower in order for me to be like, oh crap, now I'm underwater or wrecked. Obviously, I don't use leverage. I know some people can, but I don't advise people to do that. Just stay humble and sack sats. And they're kind of tying in Preston one last time. I find it interesting because for me, I first heard about Bitcoin in, what was it, 2011, 2012? When was the Bitcoin pizza thing? 10,000 Bitcoin for pizza.
2010, maybe
2010. So I did hear about it then. My dad,
before my time.
I vividly remember my dad like saying he saw something on the internet or in a newspaper, like, oh, this guy paid 10,000 Bitcoins for this pizza. And we just thought it was like, whoa, like magic internet. Like, what is this?
Yeah.
And then I forgot about it for years. And then, I graduated college in 2015. I really went into engineering and ultimately kind of doing investing on the side. I really love doing that, kind of doing the more value investing approach, kind of like Preston. And, like exactly to your point, everyone thinks they're a genius when they're making money. But like, I didn't understand the deeper problems from the 2008 financial crisis. I was just entering college right when that was going on. Or no, my apologies. I was in high school right when that happened. So it was kind of too early for me to really understand everything that was going on. Now, looking back in history, watching The Big Short or even reading the book, just realized that the people that caused the financial crisis are the ones that made out like bandits in the end. It's just really disheartening. And even I'd say in 2020, before I really understood Bitcoin, I'm class of 2020. I had stop losses on my Robinhood portfolio, or basically my play money. If that went to zero, it was whatever.
Yeah.
So a lot of learning lessons here. I had stop losses on them about 4% or 5% below the actual value that I was. I had ridden them up. They were up about 50%, 60%, some of them even 100%. In January, I watched as my whole portfolio gets liquidated, and I'm like, oh shit, like something's going on in the world. I watched everything, tech, health, finance, whatever. All my stocks got liquidated in that. So I'm like, something's going on here if everything got liquidated. It'd be one thing if it was sector by sector or whatever. I watched as everything got liquidated. And I waited, and then ultimately I got lucky. I mean, that's the way I'm going to call it. I watched as, the economy shut down. I watched it tank, simple Warren Buffett words, buy when other people or sell when other people are greedy, buy when other people are basically fear, so much fear in the market. So right when I thought we were at peak fear, I was buying in like end of March, middle of April.
2020, yeah.
Of 2020. And then ultimately I aped it all in by June 1st. I had put everything back in. One of the things was buying Bitcoin on Robinhood. So I know before Odell screams and cries.
Your first Bitcoin was Robinhood Bitcoin?
It was. And I learned very quickly. I DCA'd out, which is like counterintuitive. I taught some people that trick. Like I dollar cost average out of Robinhood. And it was small enough that it hadn't mooned yet, that like it was too much of a tax burden. But I DCA'd out while DCAing in, lump summing into other places, basically.
Because you couldn't withdraw.
Yep, exactly. And that was one of the things I heard from, I don't know if it was from you or one of the other Bitcoiners, but people basically being like, you want to withdraw your own keys. And like in the first week, I'm like, okay, I got a small buy in Robinhood and I couldn't do that. So I'm like, let me like sell this then, take the taxable hit, and then just buy like real Bitcoin. So segueing into that. So obviously you're more on the privacy end of Bitcoin, talking about the different things. So obviously there's trade-offs between privacy and convenience. Can you list the differences between the two in terms of buying Bitcoin on exchanges and such?
Well, first off, you mentioned 2008. 2008 financial collapse was pretty formative for me. I mean, that was way before I discovered Bitcoin, but number one takeaway I got from that was just the people that pretend to be experts have no idea what the fuck they're talking about. So it primed me to be at least contrarian on the financial side. And then Snowden primed me to be contrarian on every side. But privacy versus convenience. Look, you just gave us the perfect example. When I got into Bitcoin, first of all, by the way, every single person thinks when they get into Bitcoin it's late. Yeah. When I got into Bitcoin, I thought I was late. People 2 years before me thought they were late. I was reading posts about them thinking they were late, and they were reading posts about other people thinking they were late. Everyone just always perpetually thinks they're late. I know it's kind of become a meme that we're still early. We are very early still. I'm, not as early, but we're still early. And it's important to keep that frame of reference and not, that's where people get really greedy. When they think they're late, they try and use leverage, or they try and go, punch above their weight in terms of of how much they're actually putting into Bitcoin. They don't put, they don't have anything on the side to make sure they can pay rent. If we go down 2020, in 2020, when we fell down to 3,000, if you needed that money, you were fucked. There were so many people who got liquidated or were forced sold. And people think reckless traders, like if you use BitMEX or FTX and you're on like a 20x leverage or 100x leverage on BitMEX, everyone knows you're a degenerate gambler, right? That is known. But what people don't think about is if you're using like a BlockFi or a Celsius or even like an Unchained Capital, which I would say is has some of the best risk model of all of those options, and you just have a loan on your Bitcoin, that's a leverage position as well. And a lot of people got liquidated in March 2020. People that thought they were being responsible, they were just using a financial instrument, right? They were just doing a tax beneficial borrow off of their Bitcoin. And they weren't humble about it, and they got fucking wrecked in 2020. Well, meanwhile, if you were holding your own keys and you didn't have any leverage on it and you had no liabilities on it and you had an emergency stash of fiat so that you could live your life, you could just turn off your computer. You could just turn off the TV and wait it out, wait for that correction to come back, right? So, I mean, March 2020, I think, was a big learning experience for a lot of people. And it just, once again, just highlights that Bitcoin is a survivor's game. Like, people see survivor's bias. When, like, you come in 2020 and you see all the different traders on Twitter and stuff, I've seen so many of them come and go. There's a handful that have been there the whole time. But most people just get fucking wrecked. They come into Bitcoin, they get wrecked. They dabble in shitcoins, they get wrecked. All different ways you can shoot yourself in the foot in this space. And at the end of the day, it's about trying to survive long enough. Back to privacy. So when I got in, no services had KYC. KYC being know your customer, where you upload your ID, information. Maybe you take a selfie. Binance requires you to take a selfie. The famous Binance leak had, like, you were taking a passport picture. I think BlockFi now and a bunch of other services make you do like a 3D scan of your face, home address, obviously bank account information, phone number, email address, maybe like what your job is, social security number. They ask for all this information. They store it forever, often insecurely. They share it with government agencies. They share it with surveillance companies. And that data is basically going to be there forever. I think the American policy is 7 years they have to hold it for, but in practice, you should just assume it's forever. Now, somewhere around 2016, it started to get normalized. Like one by one, all these centralized Bitcoin services started adding KYC requirements, and they were getting pressure from regulatory agencies and whatnot. And some of them were made examples of to kind of scare the other ones into compliance. But also there was a lot of over compliance. And what has happened since then is people that come in the class of 2020, like yourself, will primarily come in through a regulated service that does very advanced KYC practices, or very extreme KYC practices. I wouldn't even say it's advanced, because one of the big things, if you start paying attention to KYC AML procedures, is it very rarely stops criminals, because criminals can buy KYC information, they can steal KYC information, or they can use non-regulated services to do their trades. They can get around that regulation. But regular people end up giving away all this personal information. It gets compromised. And what happens is, they become at risk for persecution, theft, identity theft, fraud. People get locked out of the system. You just can't use it, right? Like, Bitcoin is supposed to be permissionless money, but like, these services they'll just deny you services if you're from a certain part of the world, or if you don't have, proper ID information or whatnot. You're locked out of the legacy financial system. All of a sudden, you're locked out of the Bitcoin financial system. So unfortunately, the result is that it's become the norm. Most people are coming in through KYC services. Some of those KYC services don't even let you withdraw your own Bitcoin to your own keys, like Robinhood. Robinhood, fortunately, it seems like they're going to start allowing it, but when you came in, they weren't allowing it. I still think it's like waitlist or whatever. And one of the big things that happens is you see a lot of people. I wonder if you don't mind me asking, like how many KYC services have you signed up for?
Me,
Yeah.
four,
Yeah,
exactly. I think. Yeah. And I know that's another point that you've brought up. Like, if you're going to do it, you might as well do it with one. Well, it's like, well, I had Robinhood. Then, of course, I went to Coinbase. And then I'm like, well, fuck Coinbase. There's a whole list of reasons we can get into that. I signed up for BlockFi. Not that I was going to use interest bearing. I'm like, why would I want to get 6% when I can miss 200% upside? Right. And actually, I want to bring this up. So
what was the fourth one?
So Strike and Swan. So those are the other ones. Yeah, 5.
That's the big concern I see is that, look, so we know KYC is dangerous. We know this information can leak and can be used against you in the future. We also know that these services are actually keeping your transaction history as well, which we can get to that at a later part, but they can track you once you withdraw your Bitcoin as well. And they can use that information against other people that are not necessarily using their service through like process of elimination, to track people that are not their clients. But users are not being, the trade-offs of that trade-off risk is not being made clear to users. Even if you're in a world where, okay, you decide that your trade-off balance makes sense to use KYC, you should be trying to minimize the amount of services you use. And the one you'd like literally to one, like, I think you should, if you're going to do it, you minimize it to one. You pick one that you trust as much as possible, because it is a very trusted relationship. People talk about not your keys, not your coins, where you keep custody with an exchange. They're custodying your personal private information, super sensitive information, and you can never withdraw that. So you need to pick one that you trust the most, even if they're all going to fuck you probably. And then just use it as like an on-ramp or an exit of the traditional financial system, and just, never come back. Like there's no selling Bitcoin. There's spending Bitcoin in the future. But like I have never sent Bitcoin to a regulated exchange and sold it to my bank account. Like I just have never done that. And that's so foreign to people. That is like, it has been normalized. And the extent that it's been normalized is absolutely astounding. And it scares me because I look at the marketplace and I look how quick that got normalized. And it's like, what happens next? What gets normalized next? Does self-custody go out, stop becoming the norm? Do most people just keep their coin on exchange? Do they use just regulated services that like automate the process? So like, one person's on Cash App and one person's on Strike, and they're like, ooh, Bitcoin open monetary network, but they're not actually taking control themselves and using Bitcoin as a permissionless money. So those are like my fears right now. I think Bitcoin, the network, has gotten past, most of the kind of worries that a lot of us had over the years. But that user issue, there's that user issue where I get concerned about actual Bitcoiners, and Bitcoiners are the strong point and the weak point, but not for the network, just for themselves.
Yeah, there's definitely 2 points I want to hit on that. I mean, I call it flavors of the week, but if you look at history, I mean, what the Americans did to Japanese people after World War II, or during World War II with Pearl Harbor, you could say the same thing about Koreans in the 50s. You could say the same things about Vietnamese people in the 70s. You could say the same thing about Muslim people in the 2000s. You could see the same thing about, Canadians and now Russians in 2022. So, the song and dance is the same every year or all the time in history. It's just replaced with X population instead. I think there's something that you keep bringing up, or at least I've heard in, I think the Rabbit Hole recaps with you and Marty, is that the gun community in particular is very against a federal regulated registry of gun owners in the world. I know that they want it, and basically the NRA and the gun community push back always. Like you said, it's kind of like a creeping thing, though. Who knows, maybe one day that they'll actually win the fight and get a registry or force you to get a registry. And then if you're not registering your guns, you're a criminal. I guess I'm ready for that fight. if that does come that way. And, they're going to try and do the same thing with Bitcoin. In a way, they have their own registry.
No, Bitcoin's already, the Bitcoin community, especially corporate Bitcoin interests, they just rolled over and they just let it happen. We already had that's why I bring it up, is because, specifically in America, the gun community, that's a strict red line for them. And will they always be successful at it? No. Like, there's a lot of encroachments that happen in terms of gun registration and whatnot. But ultimately, it's a line that the community realizes is extremely dangerous, is to have these centrally located databases of gun owners and their guns. And we saw this happen in Australia recently. One of the provinces in Australia, or territories in Australia, I don't know what they call like their substates, it leaked all the gun owners, where all the gun owners lived. The full database leaked. And it just blows my mind that like Bitcoiners will say, we have no choice. We have to play ball here on compliance. That should be, they should at least be fighting for it. And then they tell me there's no, and I'm not asking, like, it's not that much. I'm not saying that, break the law. I'm saying push back. And you see it happening with the shit coins. Like, Coinbase has spent millions of dollars fighting for the ability for them to dump ICO tokens on retail and for them to sell all these borderline securities, which, by the way, I don't believe in securities regulation. I'm not the type of Bitcoiner that's like, oh, I hope the SEC crushes shitcoins. I think Bitcoin just crushes shitcoins naturally. But like, Coinbase has spent a lot of money fighting that on that side. But when it comes to user privacy, nope. That's just something that we just don't fight for in this community. And it's short-sighted, and it's an absolute shame. And a lot of Bitcoiners are going to get burned because of it.
Yeah. And even like talking about getting burned as well. I registered for, like I said, 5 different companies for Bitcoin things. And even the good ones, the hack just happened with HubSpot, with right. Unchained Capital. And I really like a lot of the guys there. Unchained Capital, Swan, I have a really good relationship with. I won't name any of the other ones because I think some of the other companies did not handle it well. But ultimately, even people that we really trusted. And I know you had a chance to talk to one of the people there, and they were like crushed by it. They were like really, really upset. And Unchained Capital,
the Unchained guys and the Swan guys are absolutely crushed.
Yeah, I talked to the Swan guys and they were pretty upset about it. But I know the Unchained guys, they had even gotten rid of HubSpot. And to your point that they keep the information forever.
No. So with Unchained wasn't HubSpot. It was Active Campaign.
Oh, okay. All right.
For HubSpot. So Active Campaign and HubSpot are trusted third parties that handle communicating with your users or your clients. And they have a bunch of sensitive information. Now, they don't have your KYC information. They don't have your balance information, your transaction info, but they have, name, phone number, email address, IP address. These are very sensitive. These can be very sensitive items, especially if they're connected to Bitcoin. That information can then be connected to other hacks that happen, because our information is getting compromised all the fucking time. Like, there's compromises of like Ticketmaster and shit. And if you got concert tickets or your billing address is on Ticketmaster and it's attached to the same email address as one of these, then they know Bitcoiner living at this home address, right? And there was actually a recent vulnerability where on Coinbase, if you knew the email address of someone, you could look up what their Coinbase balance was and how much Bitcoin they had on Coinbase. So all these things get mixed together. And ultimately, I think these companies have hopefully learned a very expensive lesson. So we always talk about trusted third parties or security holes. You don't want to trust a third party. You want to minimize that trust. Now, for a lot of us, there's going to be some elements of third parties that we're trusting. And that's why I don't say trustless. It's about minimization of trust. Now, sometimes you choose to trust a third party like an Unchained Capital or a Swan. They were trusting another third party. So we had it was like a Russian dolls, right? Like you had like a trusted third party on top of a trusted third party, amplifying that risk. So what I want to see is I want to see more companies, first of all, trying to minimize as much data as they take. Like the data they hold should be as little as possible.
And it probably should be as valuable as Bitcoin too. Sorry to cut you off there.
It should be treated as more valuable than the Bitcoin. because it's forever. And then the second thing is they should minimize their reliance on third parties. They should be doing as much of this stuff in-house as possible. None of these, actually, with Swan, it's a little bit of a different story, because Swan and Strike both use Prime Trust on the background. So they don't actually even hold your fiat or your Bitcoin. But like Unchained would never think to have another company hold your Bitcoin for you or your intimate transaction info. So why are they holding your name, right? And I think these companies have learned a very expensive lesson, a very painful lesson, one that is hurting users, and hopefully they improve from it. With HubSpot specifically, it was 30 cryptocurrency companies got hit because one HubSpot employee got compromised, and then they went after those 30 people. 30 companies. I can't even imagine how many customers. Like one of the biggest, I mean, I know we're Bitcoiners, but like one of the biggest NFT platforms was compromised in it.
Yeah.
And as much as we love Bitcoin, that probably had way more users than the Bitcoin ones did. And, it was a real tragedy. It was a bad week.
Yes, a very bad week. And I heard your riffs with you and Marty on TFTC. It's just a bad week in general for it. I'd love to see Bitcoiners. We always talk about building, whether it's open source or different interfaces or interactions or wallets or whatever. I'd love to definitely see the Bitcoin only companies. I know this starts getting more expensive, but to your point, start running your own servers. You have to build your own server farms. You have to run your own things like that.
It's a low time preference thing, right? Like I think if you own the stack, if you control the stack, and you build on a solid foundation, you're going to reap the rewards as a company long-term, because you're going to build up customer trust. Those customers aren't going to get fucked over by you, right? Like it's low time preference versus high time preference thinking. And we talk about low time preference all the time, but I feel like most of the companies don't really embody it. And it is a hard balance, like, because at the end of the day, when you look at like the modern tech landscape or the modern venture landscape, like it's all about getting rich quick. It's all about monetizing user data. It's all about growth at all costs. Like it's not a low time preference model. You have to like rewire your brain to think long-term and build on solid foundations. But the companies that do, and the projects that do will do significantly better long-term, in my opinion.
Yeah. And tying this back to even people getting screwed over on loans and stuff like that, and like high time preference mentality. I know BlockFi, obviously they're a lending platform where they provide.
They were in the HubSpot pack too.
Yeah, no, exactly. And I was tying to this. Did you see, like maybe a few months ago, there was a guy that I think had $500,000 loan out on BlockFi.
So fucked up.
And obviously we fell from the all-time high of 58K. I'm not sure where he activated the loan. It fell down to 20K or 29K or 30K range. And basically the way that works is when your collateral falls below a limit, BlockFi requires you to either put up more collateral or they're going to liquidate the loan, AKA take your Bitcoin. So this guy sends them more Bitcoin as collateral to keep his loan open to prevent it from getting closed. So this actually leads perfectly in my next thing. So he coin joined his Bitcoin, which
no, he didn't. He bought it on BISC and sent it directly from BISC.
That's even worse. Okay, well, so then I'm going to caveat this for my listeners. So coin join. Well, Odell, if you want to take this for two different things. So okay, one is coin joining and one is BISC, which is a non-KYC exchange. So if you could take us through a breakdown of coin joining and then non-KYC.
So BISC, BlockFi is so there's certain companies that comply with KYC regulation. And then there's other companies that like go out of their way and over comply and kind of lead the pack in terms of anti-user surveillance, pro-surveillance methodology. BlockFi and Coinbase are the first two that come to mind in that respect. Mm-hmm. Coinbase literally has an in-house surveillance firm that spies on Bitcoiners, and they sell that service to governments. They're mercenaries. They sell that service to governments, authoritarians, other corporations. So they're actively doing surveillance on not only their own users, but everyone, all Bitcoiners, and across chains too. It's not just Bitcoin specific. They're going on the shitcoins too. Now, BlockFi on the other hand, does not have their own surveillance firm. So I guess they get a point for that. But what they do have is they have very malicious policies in terms of they don't allow coin join transactions. and they don't allow, like they have like a whole list of transactions they don't allow. And one of them is like a source of funds thing from BISC. Now, BISC is a P2P KYC free software that you can run. And you basically run this software and you can buy Bitcoin from someone else or sell Bitcoin to someone else directly without a middleman. They send you the money and then you send them the other side of that trade. Now, the thing about BISC is two issues. First of all, the fiat side is the biggest issue. So one option is you can send a bank transfer to someone you don't know directly to their bank account. Now that's kind of sketchy in my opinion. I don't love that idea. One of the popular ways is to use a postal money order. So you can actually go to a US, if you're American, go to a US post office and you can fill out a money order and they'll send them the money order. You don't have to give them your bank account information. You pay with cash or whatever with the money order. You can also do cash in mail. You can also do cash in person. Basically, like gives you a million different ways you can pay with fiat. And it just comes down to the two counterparties, how they want to do it. Anyway, this specific guy, my understanding is he bought Bitcoin, and I haven't talked about what CoinJoin is yet. So CoinJoin is a collaborative transaction. It's a Bitcoin send transaction. When you send Bitcoin, it lives forever on this ledger we call the blockchain, the Bitcoin blockchain. If we are correct about Bitcoin, this ledger is going to outlive all of us. Okay. Every record of every transaction. Now, it doesn't say our names on it, but those transactions can be linked to all this external data, specifically the KYC data, but also data from where you shop, how you hold your Bitcoin. If you're using a wallet that's not using your own node, all this external data gets combined, shared, and put into these tools. And as a result, these surveillance companies are able to link identities to the transactions on chain. And they do basically a probability analysis. So like me and you could be sending Bitcoin to each other, or we could be sending it to ourselves, right? Like Bitcoin allows you to send Bitcoin to yourself. So what these surveillance companies are doing basically is they're trying to figure out what the probability is that I actually sent Bitcoin to someone else rather than sending it to myself. It's a probability game. And if they can hit it at like 80%, Matt transferred it to someone else, like they count that as a win. And they're like, okay, we're tracking it, right? Now, the Bitcoin blockchain's forever. The external data is constantly being added to. So like, even if you're maybe somewhat private now, if you're not prudent about it, and if you're not careful about it, in 5 years, 6 years, something else can be used against you and tracked back through the chain. So CoinJoin is a collaborative Bitcoin send where multiple people send Bitcoin at the same time with the same amount to break that probability analysis. So you think about it in your head, you have 5 people sending the same amount of Bitcoin to 5 new addresses. All of a sudden, all 5 people have shared history on the other side. If a surveillance or a malicious individual is looking at that, they don't know which of the 5 or which of the 5, right? That's what a CoinJoin does. It is extremely obvious on chain. You can see it on chain. You know a CoinJoin happened, but it breaks the probability analysis of who went in, who came out. Now, it's important here because this gets conflated with mixing. It's not mixing. Mixing is custodial. You send Bitcoin to someone, they send you back someone else's Bitcoin. This is not custodial. You never give up your keys. It is a collaborative Bitcoin send where you're sending Bitcoin with other people. Now, this guy bought on BISC to fill up just to get back to our story, to not get liquidated, he bought on BISC. He apparently, I think, bought CoinJoin funds. So the seller of the Bitcoin to him sent him CoinJoin Bitcoin that had gone through one of these collaborative Bitcoin sends.
Which I know Odell you bring up is good, best Bitcoin
you should
practices.
do that. When you're sending Bitcoin to people, as far as I'm concerned, every Bitcoin transaction should be a CoinJoin. But yeah, especially if you're transacting with a stranger on BISC, you should CoinJoin before you do it, and you should CoinJoin afterwards, to be honest. And you should CoinJoin every step in between. Like Bitcoiners should just be CoinJoining all the time. And the biggest way I say is like, if I pay you, or like when we're at Bitcoin Magazine and they pay us a Bitcoin bonus, like you don't want the CEO to know how much Bitcoin you have or where you're spending it or whatnot. Like It's not just KYC, right? It's like, okay, my boss sends me Bitcoin. I don't want you to fucking know if I sent it to an exchange or if I bought coffee with it or,
Or
like,
to break it down for my listeners too, it's like, imagine your boss gave you a cash bonus, but then could tie every single dollar you spent from that cash bonus to whatever you spent, whether you bought guns, whether you bought whatever.
Imagine then you go to the gun store and you pay with the Bitcoin, or you go and buy a sandwich and you pay with Bitcoin, and then the sandwich shop owner knows how much money you make. So on both sides, you don't want them to know. This is not like an illicit thing. This is just basic financial privacy, and it's accomplished with these collaborative transactions that BlockFi prohibits. BlockFi also prohibits BIS transactions, though. So not only is CoinJoin obvious on chain, BIS transactions are obvious on chain because they use a multi-sig escrow. So you can actually, the footprint of a BIS transaction is very obvious on chain. So that's why I say they were blocking it because of BIS, because not only do they know it had CoinJoin history, they knew it had BIS history.
But anyway, they basically stole this guy's Bitcoin, though.
Yeah.
I mean, if you want to,
so they said it was an illicit deposit, and then they liquidated him because it didn't meet the threshold, even though he actually sent them Bitcoin. So it was every predatory element of BlockFi all wrapped up into a single example, real world example, which is they have predatory terms. They pull people in with stories that are too good to be true, with not a high enough threshold. Like, I think in general, like, uneducated users should not be doing these borrowing schemes. But like, even like at least a service like Unchained, like they have a way bigger what is it, LTV or whatever?
The margin call rate, or the LTV.
Right. They make it as big as possible, because at the end of the day, like if you're running a business for the long term, you don't want your users to be liquidated.
Yeah. Like,
you want them to do well. You don't want them to get liquidated. BlockFi is a very predatory company, and this example really proved it. Like, it was the culmination of all those different policies all wrapped up into one, and that poor guy lost his Bitcoin.
Yeah. And then on top of that, I mean, obviously they've got a lawsuit. New Jersey filed a lawsuit. I'm not sure if New York did. But even,
but they're just getting sued for like the interest bearing product. Like, that's where I go back to like, I don't necessarily believe that like the SEC should be shutting down shitcoins. I don't think the SEC should be stopping BlockFi from giving people, 0.5% interest or whatever it is now.
Yeah.
They're calling it a security, right? Like, I just think that, I mean, look, what is BlockFi doing? BlockFi is paying them $100 million fine, cost of doing business.
Yeah.
Right. Like, it's not really stopping anything. It's not protecting anybody. I think Bitcoiners should have choices, but I also don't think anyone should use BlockFi. I just don't think like the government should shut them down. Exactly.
And I was very lucky. I mean, I'm unlucky in the sense that I opened up an account with them and I put like $100 just to test it. That's even the risk though. I put $100 in, and then that's now like an attack vector, exactly to your point of using something, giving up my KYC information for, okay, put $100 to test something, but you should really limit your trusted third parties.
And while we're on that, so BlockFi is one of the few companies in the space. A couple of them flag CoinJoin transactions. So if you send CoinJoin into the regulated service, they'll either ask you more questions, or they'll close your account. Most of them will send the Bitcoin back, but they'll close your account. Some of them will just take the Bitcoin. BlockFi is one of the few that actually monitors you on withdrawal too. So like, when we go back to like best practices, okay, so if you are going to use a KYC service, you should only use one. First of all, I think you should look for no KYC options. But let's say you want the more convenient option. You want to connect your bank account. You want to do auto stacking. You just want to buy all the time. You pick one, you withdraw frequently, and you use CoinJoin so that you have forward privacy, so that that service can't track you going forward because they're recording your withdrawal addresses and they know all your personal information. BlockFi will close your account if you do that. They check to make sure that you're not CoinJoining on the way out. And why is this even more dangerous with someone like BlockFi is they had an even worse hack than the HubSpot breach, where some of the KYC information was compromised and withdrawal addresses were compromised, and their users couldn't protect themselves without getting their account flagged and closed. So when these companies are holding your KYC information, it is, in my opinion, it's in everyone's best interest. It's in your best interest. It's in their own liability interest that they shouldn't know where that goes afterwards, because if they get compromised, that malicious entity is going to be able to track all their users. And who wants that on their head? Like, if you're running a service, you shouldn't want to have that on your head. So fortunately, there are some services, though, that are outwardly very supportive. Swan has been outwardly supportive. They're like, some of their leadership has outwardly said that people should coin join on the way out.
Mm-hmm.
And Unchained has talked explicitly about coin join, about them not caring about coin join, and that their users, should and can use it. But most services, it just goes back to the over compliance thing. Even if they allow it, they won't talk about it. They don't want to be on the record. It's a rabbit hole. It's a fucking rabbit hole.
For sure. And like I said, I've made all the mistakes buying on Robinhood, buying on Coinbase, buying on all these different KYC, giving my information on all these KYC exchanges. So recently I got a bunch of gift cards for a birthday that just passed. And I reached out to Odell. I'm very fortunate that he works at my company. So I'm like, how can I buy some non-KYC sats to get my stack a little bit bigger? And he's like, he sent me BISC. He sent me RoboSat. So
and
Odell actually,
I sent you.
What?
I sent you BISC, HODL, and RoboSat.
Yeah. So I was setting up on BISC. I was looking at BISC, looking at HODL, looking at RoboSat. So BISC and HODL, I basically was going through it, and I got to, I'm not going to, whatever. I got to a point in both of the instances where I'm like, I don't really feel like going the next step further. So let me try the next one. I didn't have to give up information, but I basically got tripped up and didn't want to go further.
They're complicated, but they don't require KYC.
Yeah, exactly. So then I try RoboSats, and he's like, "Oh, you got to do it on Tor. It's private.
Yeah, you need a Tor browser."
Yeah. So I pull it up. So long story short, I pull up the instructions. It's very clear. I'm doing this. I'm like, oh, okay, like this seems pretty intuitive. You basically create a paynim, or that's the equivalent of it on the website.
Right. It's not a paynim. It's like just a randomly generated name.
Randomly generated name. So I roll the dice a bunch of times to give it some entropy, so that it's different from the website. I clicked on a bunch of times. I copied it. I follow everything to a T. I go in and I put up a kind of high percentage for trying to basically spend the gift card in order, so I was basically going to give 5% over what spot Bitcoin is.
Whoever wanted the gift card was getting a discount or whatever.
Exactly. So for people that don't understand this on the podcast,
what kind of gift card was it?
It was what is it? One of the American Express gift cards, the $50.
Okay, so it was like the best gift card.
Yeah, so it was the best gift card. So hindsight's 2020. I could have bring down the percentage. The average right now, the average right now is like 3%. I put in 5%. I wanted to go through quickly. So all of a sudden I hear the ding. I'm like, oh, awesome. This is quick. Like 5 minutes later, I hear the ding. The transaction could be up there for 24 hours, and a chat box pops up. And, it does seem a little sketchy. I'm not going to lie. So you're talking with them like, hey, like you're going to give me X amount of sats.
You're talking with the counterparty directly.
And the way that RoboSats works is I had to put up a small amount of Bitcoin in order
security deposit.
Yeah, as a security deposit. And it's very minimal, like 50 cents. So not a lot on my end. They have to put up the sats that they owe me plus an additional bonus. So they're sending me sats. I'm sending them the gift card. So I'm kind of like new to this. I'm like, so how does this work? He's like, can you provide me the information? I'm like, yeah. So I type in the information of the American
code.
Yeah, the code, the expiration date, the CCV code. And basically it locks in the escrow of like, okay, he's going to get this. So I'm sitting there and, 5 minutes go by and he's still there. I'm like chatting to him or her. And I'm like, hey, like what's going on? They're like, I'm trying to buy this thing on Amazon. And Amazon is a bitch with these American Express gift cards. You have to like use it all. But if you use all of it and it's more, it like doesn't automatically default to like getting a secondary form of whether it's credit card or whatever else on your account. It treats it like every gift card as a credit card or a debit card. So if you go to 50
transaction is canceled or whatever.
Yeah. So it takes 50 cents as a pending transaction and doesn't work. So I see on the gift card, because it's an electronic gift card. It was actually not a physical one. It was an electronic gift card that I had for my email. So I can see the transaction in there. It's $49.50 because the 50 cents is pending that he's used. I'm like, okay. He's like, hey, I'm trying it again. So then I see it's $49. So it comes off. So I'm like, okay, like what the hell? And I'm kind of like, hey, man, can you try and buy something else? Like, 5 minutes turns into 10 minutes, 10 minutes turns into 20, 20 turns into 30 minutes, like 45 minutes now that I'm on the phone or like in this chat message. And I'm just getting frustrated. I'm like, am I getting like the rug pulled on me? Like, am I ever going to get these stats?
Take your $50 gift card?
Yeah. Like, or is it basically going to get hung? Like I saved the code, so I'm going to be fine. So lo and behold, like I'm chatting with them. I'm like, dude, like, can you do something else? Like, I see you've done the transactions. And like, can you just hit accept? Like, it's there. Like, obviously the pending transactions are going through, but it's like giving him a confirmation, I'm assuming. So all of a sudden, my Tor browser gets hung up. And I'm like, shit. Like, so I'm trying to chat. The chat's not working. So then I'm like, okay, well, I did everything else, and I saved like the code that can recreate the NIM, so I can go back into the backup seat. Yeah. So I hit refresh, and it says this instance has failed. I'm like, okay, cool. So I like bring up the website again, RoboSats, put in the thing. I go and copy paste the code that I had. It like made sure to save this code. I copy and paste the code. The NIM that generates is not the NIM that I used for this transaction. I'm like, okay, like maybe I'm off by one. Like, let me recopy it manually, put it in. It generates the same incorrect NIM. I'm like, oh my God. And I could see the transactions happening on the gift card still, even though I'm not in the transaction talking with them. So I pull up the Telegram group. I'm like, hey guys, like I'm new to this. I did this. I click save, like I click copy paste. And one of the core devs for the project is like, oh yeah, I forgot to mention, if you use copy paste instead of manually copy pasting, that doesn't work. And it generates the wrong copy paste information. And I'm like, you have to be joking. He's like, I wish I was. We never fixed that in the code. I was like, oh my God. So this instance is locked. I'm watching this dude now spend the sats. He now switched over to Apple Store because I could see apple.com and he's spending it. I'm like, okay, well, at least I lost $50, but lesson learned. I'm sitting there. I'm pretty defeated. I'm eating dinner. And all of a sudden I get a notification on my phone, bing, like the sats have arrived in your wallet. And I'm like, Matt Odell, I wish I could, I wish every Bitcoiner could see me as I'm like, Super Mario jump in my kitchen. Like, yes, it went through, like it worked. But literally lo and behold, even if you're doing everything right, like double check, triple check.
RoboSat specifically was, I think it came out like, it like publicly launched like 2 days before you asked me.
So I want to bring that up too. Odell sends me all this stuff. I then look back in the history. I was like the 90th transaction to ever occur on RoboSats is like my transaction. So I'm like, oh, okay, of course. Like Odell sends me something.
I even said it in it. I was like, Bitsker hodl. I was like, or you could try this new thing. It looks pretty fucking cool.
Right? Odell, I didn't know when you said it's new. Like I know Bitcoin's moving fast. Didn't know that it started like 3 hours ago. And like,
yeah, you were literally like the beta tester.
Yeah. So lo and behold, I got my sats. They got the gift card. We're all good. Out. But yeah, no, I was sweating it for a little bit. So that's.
I wonder. Well, so why you couldn't send it right away is because gift cards have this issue.
For Amazon specifically. So I don't know.
No, but gift cards have this issue that there's no way to. The cool part about Bitcoin is it solves this double spend problem, right? So like I can. You don't have to trust me. I can send you Bitcoin. When you send someone the gift card information, you still have the gift card information. It's like you still have the private key. So if he doesn't spend it, you can rug pull him.
Oh yeah, no, I completely agree. And like
that's the issue. And that's all these schemes are like the reason there's so many issues with these P2P KYC free services is because the issues on the fiat side, because the fiat side's broken. That's what Bitcoin fixes. So whether that's a bank account that can get reversed, whether that's a credit card that can get reversed, whether that's PayPal that can get reversed, whether that's a gift card that can get reversed, the fiat side is the problem of that transaction.
Yeah.
Now, this is growing pains. It's something that you have to deal with. We talked about privacy versus convenience. First of all, I mean, you had a gift card that you wanted to dump. So
yeah,
that worked out. But if it's about cash, I really do like the ATMs. The ATMs are super underrated. You just put in a phone number. You can use a burner phone number. If you don't use a burner phone number, it's still better than full KYC, right?
I forget what ATMs, but there are some that require you to scan an ID. And I have not
fuck those. It depends where you live. it depends where you live, but in a lot of places, there's ones that are just a phone number. Now, if you use your personal phone number, yeah, it's tied to a bunch of identifiable information. It's better to use a burner number, but it's still better than uploading your passport, to one of these big centralized services, putting in social security number, doing all this other stuff. But ultimately, long term, what we're going to see is a circular economy develop, where you're not buying Bitcoin, you're earning Bitcoin, and you're not selling Bitcoin, you're spending Bitcoin.
Yeah.
And then we get past this issue of connecting the fiat to the Bitcoin world. But until then, it's going to be very painful. And every option for the P2P side trading is always going to be, there's going to be fraud risk. Like, one of the ways they try and handle fraud is all the KYC information, right? So like, if your counterparty defrauds Coinbase has someone that they can sue or press charges against or whatever, right? So it's like it's always a bit of a minefield on these KYC free exchanges, but most of the time you'll have a good experience. People do get defrauded sometimes.
Yeah. And like, you felt like, I'm trying to be honest, I wasn't trying to like rug pull this guy by sending him the information and taking the stats.
But you could have easily rug pulled him.
Oh, I could have, but you hope to be, don't trust, but don't trust, like verify definitely comes into play there. And, I wasn't trying to screw over the dude. I actually wanted the sats. I didn't want to like lie about it, but it's definitely, the fiat side's definitely the thing that sucks the most. Tying that back to when I was finally getting rid of my Robinhood account completely, like even stocks, everything, I'm trying to lump it all into Bitcoin. In order to limit my tax liability, I was basically selling half my equities on like December 24th, 25th. And then I was buying Bitcoin with that. And then I sold the rest of it, like literally like midnight. I remember this midnight of 2021. I'm like, my girlfriend's like,
it's
first
a different tax year.
Yeah, no, it's a different tax year. So I give my girlfriend the kiss. I'm like, okay, like I'm trying to do this Robinhood stuff. She's like, what are you doing? It's like midnight. Like we're drinking. I'm like, no, I'm trying to do this. So I like smash bought a decent amount of Bitcoin with like Robinhood moving over. Obviously, Wall Streetites and all that. Like I think even New Year's was on like a Friday or Saturday in 2021. I forget. So then Monday, it wasn't a holiday, but then they're like, oh, it takes 5 to 7 days from the time of doing this. So I like smash bought it on like the 2nd or the 1st.
Right, because this is Swan, right?
I think it was with Swan. And then it's like, oh, it's like waiting for the transfer to come through. But then I realized like, oh crap, the amount that I don't have enough fiat to cover this transaction. So then I was getting nervous that I was going to get hit with like, an over withdrawal fee. Luckily, it like the money moved at just the right time that like it went from like moving in to moving out pretty seamlessly. But I'm like, with my luck, I would have been hit with like an over withdrawal fee. TD would have locked up my account. And like, to your point, just like the problems with the fiat side of things. But I was getting nervous because I was watching as Bitcoin's like doing this. I'm like, I'm late. I'm missing hyper Bitcoinization. As it's like,
well, that's how everyone feels. Like,
literally,
is when you're buying your first. I mean, yeah. I took I think the first Bitcoin I bought took 3 days, 4 days, and 30% fee.
Yeah, that's insane.
And I was just like at parties and stuff, and I was like, shit, I'm not gonna buy it in time. It's gonna leave the station without me.
No, I completely agree. And I know you and Guy Swan have very funny stories about that as well. He was very early as well.
I wasn't early.
You were early. What? You were late.
I was late.
So I guess without repeating yourself, so I know episode 43 of Citadel Dispatch with you and Bitcoin Q&A. He was on one of my episodes. I think he was 55 or
He's
50,
the best.
54 for me. I'm not going to dox him, but he obviously has a very different accent from Matt and myself. Right. Awesome dude. I mean, to be honest, I don't know what he looks like, where he is truly.
Right. I've never met him in person. I think we all know where he's from though, based on his accent. So you brought up Citadel 43 with Bitcoin Q&A. That's citadeldispatch.com/CD43. So that was like, that's a perfect example of what I'm trying to focus on now, which is I reached out to Bitcoin Q&A. We do a lot of work together. And I said to him, I was like, we need a 2-hour conversation, 2.5-hour conversation going from start to finish. New Bitcoiners coming into the space, what are the best practices? And not like the sugar-coated bullshit best practices where they absolve you of personal responsibility. Like this space at its core is about personal responsibility. If you don't take personal responsibility, you're going to get wrecked. And personal responsibility is never going to be the easier option. It's always going to be the less convenient option. It's going to always be the more difficult option. You know, we can support tools and we can have builders out there that are building open source projects to make it easier, but it will always be more difficult than going in through one of these services that completely absolves you of personal responsibility. So we went point by point, talking about privacy, talking about the different trade-offs you should consider as you enter Bitcoin. Yeah, I was grateful he joined me for that. I hope that is very helpful for newcomers into the space to kind of enter in a more responsible, prudent way, so they don't have regrets after the fact.
Yeah, and before I ask the final wrap-up questions, I know we're coming up on an hour here. What's the name of his website that people always conflate that you created, but actually he created?
It's because I chill it more than him. It's bitcoiner.guide. And specifically, I mean, we've been talking about no KYC. If you go to nokYConly.com, it's his particular section in bitcoiner.guide, but the whole guide is fantastic. Yeah, I mean, I used to make guides, and then he started making so many great guides that I was like, nah, I'm just gonna shill his guides.
And the problem with making guides, as you know, is once you create it, you always have to update it. It's like
in Bitcoin land, it gets outdated in 3 months, 4 months. I have, one of the few guides that I've made recently was the Open Dime guide for spending an Open Dime. And like 3 days before Christmas, the two wallets I had in the guide that showed you how to spend it both changed their UX. So I had like people messaging me from all around the world, like, I gave my relative an Open Dime and I linked to your guide and it doesn't work. I'm like, yeah, well, I fucking changed it right before Christmas. It was like, so I had to like rush an update out like a week after Christmas because of it. But yeah, it's a thankless. It's not thankless. People are grateful, but it's not truly appreciated how much updating you need to do.
Yeah, no, I can definitely concur with that. So, Matt, I'll give you one last minute, I guess, to say. So aside from everything that we hit on this, why is non-KYC or why is privacy important? And why is that a willing trade-off compared to convenience? I know you said it's more difficult than you and I have talked about my RoboSat story with BlockFi and all of that. But if you want to give a 2-minute answer, a minute answer on that, why is
I think, look, first of all, privacy is a scale. It's not black and white. People say to me, Matt, you're public, you talk about Bitcoin, like you're a LARP, you're a hypocrite. First of all, sometimes I do regret talking publicly about privacy and Bitcoin, but it is what it is. What's done is done. Privacy is not secrecy. Privacy is the ability to selectively reveal yourself to the world, not be completely anonymous. You get to choose what you want to be out in the world. And at the end of the day, what we're seeing is we have never been in this situation before. We've never been in a situation where the world is increasingly digitized, where everything is online and it's out there forever. It's tracked, it's stored, it's used on other databases. All the databases are combined, all used by companies. We have companies that they're pure monetization incentive. We talk about incentives a lot in Bitcoin land. Their pure incentive is to monetize your data. They basically use you like data cattle. And then governments love surveilling their people because surveillance is control. And in tandem together, they're extremely powerful. People have wiretaps in their homes. They have Alexas. They have Google Homes. They have the Ring devices where Amazon sees every single person who enters and exits your home, right? So this doesn't start or end with KYC Bitcoin. This is a increasingly Orwellian surveillance society that we have not seen the true ramifications of and repercussions of. And it's about decreasing that digital footprint that you're leaving places. And if you do leave a footprint places, be aware of the footprint you're leaving. Be aware of what you're putting out there. And think about it and think about the trade-offs and slowly and steadily try and reduce that footprint. And what happens is, yes, if you reduce that footprint, it helps yourself, but also at scale, it helps everybody else because it's impossible to be the only private person. You need other people that care as well. And I think at the end of the day, if we care about what our future ends up as, this has to be one of the most important issues. And the number one thing I just want to get across to people is just be aware of the concern. Be aware of the concern, slowly and steadily try and improve yourself, and just keep on stacking on.
Yeah, I completely agree. And I don't want my listeners to feel overwhelmed. Matt can definitely relate to it. It's if you think about everything that I've done wrong, it definitely overwhelms me at times, but, just take it slow and steadily, try and stop using these mass surveillance companies. Even to Matt's point, look what they did to Snowden. We used to think that Google and Apple and Amazon were the customer's best interest. You're just a data cattle, as Matt calls it, basically. So no, I really appreciate that. I guess the one thing that, we always try to take things to the worst. And I know Matt's always, not that when I miss things, Matt always has a way of humbling me in the sense of shit, we're dead, we're screwed. When I listen to TFTC, sometimes I definitely get down. So I try and save those episodes for if I'm in the mental headspace for it. Marty's definitely the more optimistic, where Matt's the world's ending. This is horrible. Everyone's going to have Alexas aimed at my house wherever I live. So I can't even leave without being doxxed. So Matt definitely helps me cover my blind spots, but definitely worries me at times.
Don't get overwhelmed or disillusioned. Or the funny thing is, what I hear a lot is, the meme in privacy is, I have nothing to hide, so why am I concerned? But that's not actually what most people say. What most people say when I talk to them about privacy is, I'm already fucked. Why even bother? And the number one thing I want to get across to people is, it's the story isn't over yet. You're not completely fucked. You can improve your situation slowly and steadily. Do it.
Definitely. So Matt, I asked the last two questions, and then the last one I let you show where people to find you is. It's been a pleasure having you on the Amateur Investors. I know we've become a Bitcoin podcast now, but what's been your biggest investment or business mistake that you've made in your career? I normally don't let Bitcoiners cop out and say not buying enough Bitcoin. So
I didn't buy enough Bitcoin.
That's always true.
The biggest investment mistake
or business mistake with any of the businesses that you run or you're part of.
Oh, in 2017, yeah, 2017, I had a couple wallets that I lost.
Really?
I was too paranoid about how I backed them up. Does that count? They were Bitcoin wallets.
So are they in your previous establishment?
They weren't really an investment mistake. No, I have the hard drives. I can't get access to them. I made the passwords too complicated. One of the number one things you can do, by the way, is don't store all your Bitcoin in the same method.
Yeah.
So it's just like the Titanic. So you only lose a portion. You don't lose all of it. My biggest investment mistake was knowing that Ethereum was a flawed project, but not buying any during the ICO, because I'd be retired by now. And I know that's a little bit controversial, but what I realized is sometimes the best short-term investments are evil investments, and you don't have to shill it. I think shilling it is where, when you start shilling these projects without disclosing trade-offs, that's where you really are morally questionable. And I think I wouldn't be able to live with myself, but I knew it was going to pump. I was furious about it. And I was this is a flawed project. They're selling you bullshit. It's all garbage. It's going to pump so fucking hard. And I was morally above it, and I literally just watched it go crazy. And I'm not even talking about in USD terms. I watched it pump like crazy in Bitcoin terms. I was there when the ICO was happening. I had friends buying the fucking ICO on the website, and I could have clicked buy. And I was nah, not gonna.
Are they retired is a better question.
No, they all get wrecked. Everyone gets wrecked. And once you go, you don't no one sells the top, right? But you're asking me for my biggest regret. I don't know if that's my biggest regret, but it was a failed. Like, yeah, there's no way I was going to buy the ICO and then sell the top. I probably would have gotten fucking wrecked even more if you want to be honest. So stay humble, stack sats.
That works. Yeah. What's your favorite book, podcast, YouTube channel, or website that you like to go to for investing information outside of your own or ones that you're part of?
I don't know, man. I'm myopic now. It's all Bitcoin.
That's what I meant. Yeah. Bitcoin books, Bitcoin podcasts, any ones that outside the purview.
Look, I love Stefan's pod. I like Valis's show. I like Princey's show. I like Bit by Bit by Max. I'm gonna miss some. I really like Opt Out podcast by Seth Simmons. He likes Monero too, but he does really good stuff on the privacy side. Yeah, I mean, I mostly I mostly listen to Bitcoin shows now.
That's all I listen to as
Bitcoin
well.
content. And honestly, like, to be honest, like, I really do believe, like, one of the things I hear a lot is I'm not a finance person, so Bitcoin doesn't interest me. And the whole point of Bitcoin is you really should be able to just focus on everything else you do in your life. You shouldn't have to. And I know I'm saying this as someone who has podcasts is named The Amateur Investor, but like, really, no one should have to be an amateur investor. You should just stay humble, stack sats, work a job you love, and then focus on things you love while your fucking money appreciates in value in the background. And you don't have to be a fucking expert stock picker.
Yeah, no, I was thinking of changing the name once I became more of like kind of fully understanding Bitcoin, but I think I just got to leave it for the long term. It's like, I'm just an amateur investor. I just only bought Bitcoin, and that's what got me here in 10 years from now.
I fucking love it. I don't change the name.
All right, I'll keep it from Matt Odell. And then once again, Matt, thanks for coming on. If someone wanted to learn more about you, your businesses, where should they go to find out more?
Thank you for having me, Chris. It's a pleasure. I look forward to kicking it in Miami. Well, go subscribe to my show, citadeldispatch.com, or type in Citadel Dispatch in your favorite podcast app. I'm Odell on Twitter, Odell, and you can go to mattodell.com if you want my contact information. Always happy to answer any questions if you need feedback.
There you guys have it. Thanks everyone for listening. That's episode 71 with Matt Odell. Catch you guys later. Peace out.